the major markets, stock markets, indices, should see a correction of 50 to 80% over the next few years. So I think we're now in the crisis part.
Whoa, what's going on? Meet Willem Middelkoop, founder of Commodity Discovery Fund, managing over 150 million in assets, alongside being a best-selling author and long-time macro investor. He's been warning about the fragility of the global financial system for over a decade and predicted the rise of gold and Bitcoin as a result. He currently sees a historic shift away from the US dollar, with BRICS alliance rising and Bitcoin and gold playing a key role in the new financial order.
On average, every 93 years, you get a new world reserve currency.
That is also putting a lot of risk on society in general.
This is the end of the road for us. We can't keep growing our deficits.
What's going to be different?
Well, the outcome will be way different.
Willem, gold has rallied to 100k per kilo in dollars. Not yet in euros. I think it's 95k in euros. Is this a time to be celebrating the run, or do we need to be suspicious about the macro environment that it's running in?
We're not celebrating yet. As the founder of the Commodity Discovery Fund, over 50% of our positions are gold related. But we're not even close to a top yet, maybe an intermediate top. You could have short correction, which takes a few weeks or months. But I think the overall bull market just started. Why? If you look at silver, not joining in the rally yet. If you look at platinum, palladium, not joining in the precious metals rally yet. If you look at the equities, which are gold related, well, you have some gold producers which jumped because their cash flow is enormous now. They have a license to print money, gold miners. But if you look at the exploration side of the business, that's what we are specialized in. So the companies which are still cash flow negative, who are looking for extra ounces and finding more ounces in the ground, they're still valued rock bottom. They haven't. It's like the altcoin market. They just show the first sign of life. So this isn't the top of the bull market. The bull market has started. I'm quite sure about that. But there's much more to come.
It's just gold has rallied like, 25 to 30% this year, and last year has seen a similar move.
35% last year.
Which is quite, an outlier to the upside, I would say. But if we look at the entire landscape of everything involved in the commodity sector, basically only gold has moved as of yet. I did a podcast with Tavi Costa, I think 2 months ago, and he was actually saying that if you're owning gold, then you might not become a millionaire. But if gold becomes or starts to rally up, the margins go up for miners.
Oh, that's incredible now. If you look at the cash flow, the free cash flow, one example, one of our large positions is Greatland Gold. Greatland Gold was a gold explorer in Australia, and they were lucky and they found a huge deposit, copper gold deposit, under sand cover, which was a few hundred meters. But they made this discovery 40 kilometers east of the Telfer gold mine. The Telfer gold mine is quite well known in our industry, and that one was owned by Newcrest. Well, Newcrest was bought by Newmont last year, and then Newmont sold the Telfer mine to Greatland Gold. So Greatland Gold upgraded from a small exploration company to a intermediate size gold producer, and now they showed their latest Q1 results. They have a free cash flow of $250,000, just a quarterly free cash flow now for quarterly millions. So if you annualize that, that's 1 billion of free cash flow a year. The whole market cap of Greatland Gold was 1 billion in December last year. So that's jumping now towards 2 billion. But a company that size and that free cash flow should be valued 4, 5, 6 billion. So we're in this first process of re-rating, but actually we are still investing in companies making new gold discoveries where the gold being discovered in the ground is valued at $10, $20 per ounce. And in a bull market, this needs to jump to $200, $300, $400. So I can't believe, I mean, like a kid in a candy store, I can't believe the value we're able to buy, because now that the bull market has started. Gold is showing it. And gold has run from 2000 to well over 3,000 in a short period of time, but it won't stop there. Even JP Morgan sent out a new report just yesterday in which they envision a scenario that gold could run to 6,000. Well, you used to... those were numbers you only heard in the gold bug community. Goldman Sachs, their base case scenario is now $4,000 gold mid-26. And so as an investor in a bull market, but you can buy all these ounces in the ground, almost pennies to the dollar. That's remarkable.
It's just...
So we are celebrating, not because we have great returns yet. We're up 14% year to date, so it's starting. But we have had 4 great years in the past, and then our gross returns are 70, 80, 90% a year. It's almost like the world of crypto. So it's just starting.
Well, maybe there are big similarities with the crypto markets in the sense that gold and Bitcoin have done really well in the past 2 years. But if you go on the risk curve and you say, well, we want to look at miners, I think junior miners are still down like 40% from the high in 2011.
Okay. Silver is still down 40%.
Still down. If we talk about anything outside of the scope of Bitcoin, like for instance Ethereum, it's still down 60, 70%. So there are big similarities.
Yeah.
But the question is that right now a lot of people are jumping into the gold markets as everybody discusses gold. But what should like a regular investor do if they look at the macro playing field right now, the uncertainties that they see?
Buy silver, buy physical silver.
Is that because of the ratio being so far away from each other?
Yeah, if you look at the gold-silver ratio, that's 100 to 1 now. So it means silver is 100 times cheaper than gold. Mm-hmm. If you look at the historic valuation for silver, it's like 10 to 1 or 15 to 1. So it should be 10 to 15 times cheaper than gold. And that's because gold is scarce. So it's easier to find silver. But nowadays, silver price has been depressed for such a long time. There are hardly any new silver discoveries. There are hardly any listed silver companies anymore. Most of the silver companies, like Wheaton is now 50% the gold company. Mm-hmm. Same goes for many silver stocks. They added gold projects. So we're running out of silver. Silver is damn cheap, and everybody can buy some silver just to put away and ignore. And in 10 years' time, you will learn it's much higher.
On the other hand, we have the final speech of Warren Buffett a week ago. He, I think you retweeted it a few days ago, that he is concerned about the fiscal policy of the US.
And the fiscal status.
Yeah, but on the other hand, he has, what is it, 400 billion in cash?
He was a silver buck in the 90s. He bought a huge amount of silver.
I saw some comments that his dad used to be a gold buck as well.
So he understands this well, but he understands the risks to our financial system. If he would use, let's say, 10, 20% of his cash position to buy silver would be $100 the next day. He can't corner the market. It's too dangerous.
Well, if he makes a move, everybody is following as well.
Mm-hmm. He never.
Mm-hmm. Well, the thing is that he is starting to have some concerns regarding the fiscal policy and the fiscal state of the US. And the only question I have is, why is he having so much cash on the balance? Like, he also mentioned that a lot of investors are likely going to go into emerging countries.
I can explain quite. If you're sure the market, the stock market, has reached a point where you've ended up into the everything bubble. So everything reached a valuation which, compared to historical standards, historical bull markets, you know that the risk reward as an investor is highly against you. So what happens when the market tops and a major bear market starts? Then if you're a student of history, and if you're a student of the history of investments, then you know when there's a major bear market, everything goes down.
Mm-hmm.
And the best way not to lose money is not to be in the market. So to sell and keep cash. And the cash you put in short-term treasuries. And he understands this. He's been in this market so long. So it tells you he expects a major correction of these overvalued markets. And then suddenly, after the correction has ended, and the bear market has ended, and don't forget, between 2000 and 2003, all the tech stocks went down on average 80% on average. So when the bear market then ends after a few years, you look at all your investor friends, and the smart one lost only 20%, and the stupid one who was in Altcoins, he lost 80 or 90%.
That hurts.
and then you're up 3% with your treasuries. Who was the smart investor then? And maybe it would have been better for him to go towards gold, but I doubt it, because when everything sells off, even gold often sells off with a little help from the guys on Wall Street who don't want to have the picture that gold is the last safe haven. So it tells me that Warren Buffett is very, very worried about the state of the market.
I think if we talk about the previous bubbles that we've seen, I think we have the dot-com bubble, we have the great financial reset in 2008, we have...
The great financial crisis.
Sorry.
Yeah. There was the real estate bubble, actually.
Yeah, we just talked about your book, so that's why it's in my head, I guess. But we also have the 1928, 1929 Great Depression.
Mm-hmm.
And I think...
Well, the Great Depression actually was in the 30s, but it started with the crash in 1921.
Yeah. With the big sort of bubble that took place during that period, where I think you mentioned in one of your previous podcasts, I think with Bart Brons, that it's very likely that there's going to be a big short squeeze taking place in the coming few years, as there are so many institutions and people short at this point, perhaps expecting a certain market outcome to happen.
Well, I know. I think what I said is that we're in this bubble territory now. Mm-hmm. And what you see at tops is the same like you see at the bottom of the market after a huge fall. You always have these very large moves up and down. You saw that yesterday in the market. Gold shares -8%, and then technology stocks up 6%. And these wild swings are typical for tops and bottoms, where people are very... the buy the dip community is still very, very large and active. And you have the institutional investors, like Buffett and like the big banks, who want to offload stocks. And during this topping phase, which might take years actually, because the rally in stocks started so long ago. During this topping period, you can have runs like we've seen now in the last few weeks. First, there was like a mini crash in the market because everybody was afraid that the tariffs would stop world trade. like we've seen with COVID. And then when things calm down a bit and we see the first negotiations between the US and China, the market goes up strongly because of a short, I think it's short squeeze. Many people were short because they thought this market is going to crash. So you get these violent moves. But the larger picture people need to understand, we're in a topping pattern. And this topping pattern for the major stock markets is very important, because if you look at the larger picture and from an Elliott wave perspective, the major markets, stock markets, indices, should see a correction of 50 to 80% over the next few years.
Yeah, that's why I said
and that's like 29 or 2000s period.
Yeah, I think we had a great week in Cape Town. I think 2.5 years ago. That was during the start of the war in Ukraine, and then we already had some conversations that we might be in a bubble pattern. The valuations are way too high, especially with these rates at this point. In my opinion, there are a lot of correlations or comparisons with the period in 1928, 1930. Yeah. Real estate keeps going up while the rates have basically tripled. Tech stocks keep going up. It's just a very volatile, uncertain, risky period where I understand that if you are a regular investor, you're like, whoa, what's going on?
But the outcome will be way different.
What's going to be different?
When we had the crash in 1929, central bankers, they didn't increase liquidity, they decreased liquidity in the market.
Mm-hmm.
So that's you can have an outcome. If you increase liquidity, there's a risk you get more inflation, like the superinflation we had after COVID, inflation rates of over 10%, double digit. It can even end into hyperinflation, but that's quite rare. But if you decrease the liquidity in the markets, so if you close the tap of the money supply, you end up into deflation. And then there's a huge risk, especially when society and markets are highly indebted, that you get a deflationary collapse. This is what economists call the Minsky moment. Everybody wants to sell, or everybody needs to sell. That's what happened in the early 30s. Mm-hmm. And central bankers know that that was a mistake. So that's why in each and every crisis now, they open the liquidity taps. So they push more money to the market. And then Bitcoin goes up, the stocks go up, everything goes up. But we've done that so many times now that we are reaching the point that the debasement of currency, because that's the end result. You know, if you keep increasing the money supply, the value of the money goes down. So the debasement of currency is leading to a flight out of fiat into hard assets. And what are hard assets? Everything the government can't print. Mm-hmm. So even real estate, even digital assets, and of course gold and silver. So gold is sending this message that fiat is going down. Gold is the stable one. People all think gold is moving. No, the fiat is moving. So if gold is going up in all currencies, the value of money is going down. Gold is the stable anchor.
And when we talk about like this period of time, I think Trump is the core topic to discuss, in the sense that he's opening up everything. But yesterday he tweeted, "The European Union is nastier than China." Why are we still here in Europe, or what should we like fear out of that message?
Well, he's the great disruptor, and he's trying to run the US government like he used to run his company. And that's quite dangerous, because what works for a company in negotiations might not work for a country. I think we reached the point now, we shouldn't forget, this is 81 years after Bretton Woods.
The first Bretton Woods.
Yeah, so the first Bretton Woods, where the US invited 44 countries to listen to their plan to use the dollar as the new anchor for world's financial system, was in 1944. It's 81 years later. So we know from history that you often see a competitor arriving as the new leader of the world and the new leader of world's financial system after 80 or 90 years. On average, every 93 years, you get a new world reserve currency. So when I want to analyze Trump's actions, I always look at the bigger picture. And this reminds me of the end of the Roman Empire, where the last emperors were crazy guys. And Trump fits that picture. And the end result now is he wants to isolate China, but he's isolating the US itself. And we just saw a joint statement by China, Japan, and South Korea. These are normally not big friends, that they have a joint approach towards the US now. The US has shown to each and every one now that they are not a reliable trading partner. You don't know what the tariffs will be in 24 hours or a week or 90 days. The US has shown to Europe that the old alliance since the Second World War is actually over. The West or Europe can't rely on the US for its safety. So I think the result will be that Europe will start to move away more towards China. And that's exactly the opposite that US wanted to achieve. So he's making rookie mistakes as a world leader, you could say. But because of his character, he feels so strong now because he won with such a large majority. And he's overplaying his hand clearly now.
He's trying to play poker with the worst hand, I feel like.
Yeah, because in a way, he's behaving like he's the most powerful country worldwide. Well, US used to be maybe the most powerful country worldwide, but nowadays, with his actions together with Elon Musk and the Dutch, in all the Dutch activities, they're sending out a message to the world. This is the end of the road for us. We can't keep growing our deficits. We need to bring the deficits down. They even, explained that to the market verbally. And they also said that they want to stop being the world's hegemon and that the US wants to move to a multipolar world. Well, these were the words China was always using. So in a way, he throws in the towel, the US throws in the towel and says and spreads the message to the world, we can't continue like we have been doing for the last 80 years. And that's what Neil Howe calls a fourth turning. That's after 80 years, you reached the end of the empire because of imperial overstretch. Imperial overstretch, you have grown your empires so large that you can't finance it anymore. This was the prime reason for the end of the Roman Empire. You're debasing your currencies. You can't pay your soldiers in good silver coins anymore. You have to use debased currency, and then you end up with an empire which is collapsing. And in a way, now 2,000 years later, the US is reaching that point. And China, I've been quite a bit to China. 2 of my books have been translated into Mandarin. So I think I understand the Chinese point of view a little. And after the Big Reset was published in 2014, I was invited to China and to publish their Chinese edition. And then I learned that the Chinese weren't translating my book because they thought I was such a nice guy. The Chinese were translating that book because it was along their vision. It was a very critical book on the dollar, on the American financial system, the American leadership in the financial system. And this was, the Chinese liked it so much that somebody from the West was explaining it in a way which was aligned with their worldview. And the book was published by Renmin University. I didn't know about Renmin University. Well, that's the university in Beijing where the bankers get their higher education. So that learned me a lot about how China looks at the US. So China knew this is a waiting game. We just need to wait and position ourselves by adding more gold to our reserves until the US reaches this point that they have the imperial overstretch and they will collapse from the inside. And that's what you see in this trade war now. What did China do after the start of the tariffs? They sent the Boeing planes, which were flying from Seattle to being delivered to China. They said, we don't need them anymore, you keep them. And now yesterday we received the news. Now Trump has blinked and came to Geneva to meet the Chinese. Now the Chinese are saying, well, you can start delivering the Boeings again. So China understands that the US is cornered, US needs to move, otherwise we'll have empty shelves in the US, you have empty harbors. So this is such an interesting play at the highest level, and the outcome will tell us who's the new leader of the world.
I think that's the big question, right? I think you mentioned before, like, I think there are multiple scenarios that are possible, which is China becomes the new world leader, but it feels like they don't want to be that. There might be a basket that creates the new world reserve currency. Or if we talk about crypto, it could be Bitcoin. And we are in that sort of period where we transition over towards the new world leader, which is very uncertain at this point.
Yeah, because the outcome will highly affect financial markets and, of course, the value of the dollar, Bitcoin, gold. But what are we seeing now? Because Bitcoin is an interesting topic, of course. And I always said that I can't envision that Bitcoin will take over the financial system, let's say, as the prime currency within the next decade. Because central bankers can't control Bitcoin, they're not willing to accept a world reserve currency, which is not controlled by them. So I envision a next phase for the international monetary system where we move away from this unipolar dollar-centered world to a multipolar, multi-currency organized world where we have the West, where we still trade mainly in dollars, where you have the BRICS alliance, which is growing by the day, and they will trade in currencies other than the dollar. And gold might be used more and more within the BRICS system to settle international trade. So you don't pay in gold for each and every transaction, but the net balance of the trade between two countries can be settled at the end of the year in gold. And it's very interesting to see that each and every country east of Germany is buying gold in massive amounts. The Polish central bank is growing their gold reserves 10x. The Czech do the same. We all know Russia sold all the treasuries in advance of the Ukraine war and bought huge amounts of gold. The Chinese have been buying incredible amounts of gold especially since the great financial crisis. So central banks aren't buying Bitcoin. There are very few central banks actually buying Bitcoin. There are only, well, you have a few fringe countries like El Salvador and Bhutan. But the value and importance of digital assets and digital currencies is increasing. And now Trump has made sure that he's not willing with the Fed to continue towards a CBDC dollar. And he is choosing privately owned digital currencies as a way to diversify for US financial reserves. Now it's getting very interesting. I think the role of stable coins in international trade might grow a lot larger because it's such a better way to finance and settle trade. But central bankers are still the guys who have the power. Central bankers, together with the governments, will make sure they will stay in control of world's financial system as long as possible. And that's why I can't believe Bitcoin will take over anytime soon.
The thing is that more institutions are jumping into Bitcoin, as with the ETFs that launched 1.5 years ago. I think Norway, Switzerland are all showing interest into Bitcoin. Argentina is showing interest into Bitcoin. The US itself wants to create a strategic Bitcoin reserve, which is basically just the old confiscated Bitcoin just being piled up in the stockpile instead of actually buying Bitcoin. That's something really different. Would your thesis change if any big top 5 country says we are going to buy Bitcoin instead of gold?
Well, if you look at the actions of central banks, like Switzerland, they bought some shares in MicroStrategy, which is renamed Strategy now. Yeah. The Norwegian Sovereign Wealth Fund bought some shares in Strategy. So what they are doing is investing in a Bitcoin proxy, which is a listed equity. And it's part of a very broad portfolio of equities. And this tells you that Bitcoin now is actually a accepted asset class since the start of regulated ETFs. Even our fund, and we are highly regulated, our fund is now allowed, and we started to add Bitcoin, a few percent, 3% as we speak, to our portfolio, because I've been coining Bitcoin digital gold in my book in 2014. And I didn't like the fact that we were invested in gold and in mining, but we couldn't invest in Bitcoin, the digital gold, and digital mining. So we changed the prospectus, and this was allowed by the regulators because, as said, you have these regulated, highly regulated ETFs now and ETNs now. So it's possible for institutional investors to treat Bitcoin now as a normal asset. Mm-hmm. And so these examples that institutional investors now invest in Bitcoin, and we are one of them, that doesn't show Bitcoin is taking over. It shows Bitcoin or digital assets are now just another asset class.
Mm-hmm. Well, it's interesting that you've added digital gold or Bitcoin to the fund.
Yeah,
and it's just a few percent. So if we do this again in 5 years, it's going to be a bigger percentage.
Well, we had quite a bit of discussion into the fund, in our fund, even among staff, among investors, shareholders, whether we should do this. But I told them it's our prime mandate is to make returns, to make money for our investors, and this is the fastest horse in the race. I've been calling it digital gold for 10 years, and I'm not investing in it. Mm-hmm. You know, how can that be?
Yeah.
No.
The thing is that
especially now it's regulated. You know,
but are you then buying ETFs?
Yeah.
Yeah, that's why. Okay, makes sense.
UCITS regulated,
you can't hold Bitcoin yourself in that sense.
No, but it's a proxy. But it's just what the Swiss central bank is doing. Mm-hmm. So you buy the proxy. You don't have to hold them, but the proxy owns the Bitcoin in one way or the other.
There's the collateral, and there's like it's really hard to believe that gold is going to do a 5 to 10x from here in the next 5 to 10 years.
Silver will.
Silver will, yeah, that's a different story. But Bitcoin still has like I think 12 to 13x if it wants to get to the gold market cap.
I tweeted a few months ago. I sent out an original tweet when Bitcoin was around 10,000 that it would reach 100,000 in a few years. Well, when we reach 100,000, I sent out a tweet. 1 million is my next target before 2030.
Well, I started buying Bitcoin when it was $700, and if I rewind all my actions, I would have been way better off just buying Bitcoin on a monthly basis.
Yeah, I forgot.
But I'm like busy trading altcoins, which isn't always the best strategy to go
No, just
for.
buy Bitcoin, go to the beach, man.
Yeah, I wish.
I only hold some Bitcoin myself, and I invested in a DeFi venture capital fund, which is highly connected with the Silicon Valley guys who are in the new project. Because I think that there's a lot of money to be made in the tokenization of the financial industry. The way stocks are being traded now and settled 2 days later, T+2.
Yeah.
That system and wiring money abroad, which takes 2 or 3 days, that system needs to change. There will be huge disruption coming from DeFi, decentralized finance platforms. And what you see now is that the US administration and central banks and guys like the OMVIF, the monetary think tank I'm involved with myself, they all agree that that wave is coming now. And companies like Cantor Fitzgerald, Fidelity, and even JP Morgan are now very serious about this. So that's the next big thing. So there's money to be made.
Well, I think, first of all, if we look at Bitcoin, it's currently $95,000 or whatever it is. And even Dan or Paul or you are all saying Bitcoin goes to 1 million. The flip side is, what is the risk if that is going to be reached? Like, something needs to go down in order to have another asset class to go up.
Well, it's fiat money which is going down.
But that is also putting a lot of risk on society in general.
Yeah, but well, we reached that point after 81 years after the Second World War that I'm quite a bit influenced by this, quite famous book by Neil Howe, The Fourth Turning, that after 80 years you often end up in this new period of change, and change comes with crisis, and change comes with opportunity. But first you need to experience the crisis. I think we're now in the crisis part. And everything which happens, or most larger conflicts like Ukraine and Gaza, are in a way connected to this major change coming to, the world of geopolitics and the world of finance. And that's also the main thesis of the Big Reset book I wrote in 2013. And the subtitle of the Big Reset was The War on Gold and the Financial Endgame, which the financial endgame on the dollar. And on the back cover, I wrote that around 2020, large changes will be needed for this world's financial system, because 80 years after the start of Bretton Woods, I could feel that the days of the dollar as the sole world reserve currency were numbered. And now we are experiencing this. But these changes always take longer than you might think. So these changes won't happen in weeks. They'll come in. They'll often take years.
Mm-hmm. How do you handle having a thesis and then the price going the other way around? Like, you have been calling the Big Reset for a long time, and we're getting into that end stage of this entire financial ecosystem that we used to know. And there are a lot of well, there's a lot of anger in societies at this point. That's why we have the wars, or even in the Netherlands, we have the demonstrations and all those things. But you have a fundamental thesis and you have the investment thesis.
Yeah.
They can be different. Like, for instance, I've got a thesis with the markets, but I've been going into altcoins a little too early. So I went underwater for like 70% for 6 months in time.
Yeah.
And people call me stupid.
Yeah, well, my main thesis over the last 20 years was that we would see continuation of the debasement of currency. We would see a situation where more and more people would wake up and would start to flee towards hard assets, gold and silver being the hardest of all, until Bitcoin arrived, because I think Bitcoin is even scarcer than gold, and that's why it's the fastest horse in the race now. So I positioned myself. I stopped being a journalist in 2008. I was a journalist for the first 25 years of my career. I stopped being a journalist. I went over to the dark side. I wanted to make money, and I positioned myself. I built 2 companies in 2008. One was a billion web shop, which I sold 3 years later in 2011. And the other was the Commodity Discovery Fund, in which we are building hard asset positions worldwide. And I wasn't aware that when we started the fund in 2008, that was the top of the last commodity cycle. So valuations at that time were pretty high. And we had to build a fund for the last 13, 14, 15 years, running against the stream because valuations came down. But this is a long-term play for me. So we use this bear market in commodities to study the world, to map the world. And now, after 10, 15 years experience, we know exactly where the largest and most valuable and most significant undeveloped gold, silver, copper, and uranium companies and projects are. And we built stakes. We took stakes in these, let's say, top 50 of best and most valuable undeveloped projects. And we took stakes of 1% up to 9% of those listed companies. So I don't care that my thesis isn't working out for a few years, as long as the thesis will stand for when I need it. I'm 62 now, and when I don't have any plans of retiring, and actually I want to follow Warren Buffett's timeline, and so I have another 30 years, and I'm quite sure that in the next 30 years we'll make an awful lot of money.
Well, yeah. Well,
by positioning ourselves in these hard assets.
I think I watched one of your other podcasts where, and I think we discussed this in Cape Town too, where I often don't call work. It has a negative sort of phrase to it.
Yeah.
It's just a passion.
Yeah. We're aligned on that.
Yeah. Well, I discussed this with my girlfriend as well. Like, who's going to work less once we get into having a family and stuff?
We can't work less.
No, I can't.
This is 24/7.
But how do you keep your sort of sanity, even like in this period where Trump is just constantly trying to tweet stuff out?
It's just get into the chopper and go towards 30,000 feet and look down and stick to your major analysis, stick to the longer term plan. Debasement of currency is continuing. More and more people will start to flee towards hard assets. Position yourself in a very diversified, hard asset portfolio. You know about my model portfolio. That's not the fund portfolio. Fund portfolio is only listed equities in these commodity plays and now Bitcoin. My personal portfolio is 25% real estate. I also have real estate in Dubai, so I try to spread my investments a bit about outside Europe as well. 25% in physical gold and silver, 25% in equities, including my own fund. But I don't have all my money in my fund. Sometimes people attack me. Why don't you put more money into your fund? Well, I diversify. Yeah. And then 25% you keep as liquid as possible, cash or Bitcoin. And I'm a very conservative investor, actually, myself. And I've done well even in the last 10 years, in which we had difficult markets in commodities, but not all of my money was invested in commodities.
It's an interesting one you say there, is that you have real estate in Dubai. We previously talked about stablecoins, which in the Middle East is a very often being used payment method. Like one of my best friends just bought his car with just USDT, which is banned here.
I have a friend who bought dozens of apartments in Dubai with altcoins.
Oh, that's nice. Maybe at some point, if it goes up, I need to go there. But
yeah. So in Dubai, digital assets are being treated the same as other forms of assets or currencies.
And that's, I think, in my generation, it's a very common topic to say, well, we don't want to be here in the Netherlands, we want to go away. And then Dubai pops up as the first country to first city to go to.
Well, it's the new Switzerland, in a way.
You think so?
Yeah. Switzerland used to be special because they had this, when you stored money at the bank there, it was like a secret. It wasn't connected to your name. Of course, that was for people who want to avoid taxes. So you could say Switzerland is built on maybe money which wasn't that clean.
Could say the same for Dubai.
Well, in a way. But Switzerland was always very attractive because it was neutral from a political point of view.
Yeah.
Even in the Second World War, it was neutral. But now Switzerland joined the US in sanctions against Russia. So people from Russia and France don't feel comfortable anymore in Switzerland. So where are they going? Go to Dubai.
Yeah.
So many of the rich people from Lebanon, they fled to Dubai. Many of the rich people from Ukraine fled to Dubai. Many of the rich guys from Russia fled to Dubai. Many of the rich guys from London and Europe are now fleeing to Dubai. Not that they move away from their original country totally, but they want to diversify. They want to have the second passport or the golden visa. And if you look at the numbers, over 5,000 millionaires were moving out of London in the last year. And if you look at the numbers of millionaires arriving in Dubai, then that explains why this city in the Middle East is growing at such a rapid speed.
It's I've been there like 10 times in the past 3 years myself. And it's a common discussion that I have with my business partner. Is to go to Dubai. Like you don't really want to live there, as it's like 45 degrees. But in terms of how fast you get business opportunities there and the connections you have, but also the ability to transfer money without a bank saying you can't.
Yeah.
Without having the big taxes like we have in the Netherlands.
Yeah.
That's a big difference.
But if you mainly have Dutch-speaking clients like we have, we're not considering of moving towards Dubai, although there are advantages. Mm-hmm. We're very happy still in the Netherlands. I don't care to pay taxes as long as it's not over 30%. So I'm not looking at Dubai for tax reasons, and neither am I looking at Switzerland for tax reasons. We have a house in Switzerland. We enjoy being there. Quality of life is wonderful, but we're happy to be Dutch, Dutch company. I pay a lot of tax in the Netherlands, and I'm perfectly fine with that.
If we talk about opportunities, of course, Bitcoin is the fastest horse. But outside of Bitcoin in the crypto ecosystem, there is a big ocean of altcoins, even Ether. You mentioned that you have invested into a DeFi fund.
Yeah.
What are the opportunities that you're looking for when it comes to crypto?
Well, I'm like a fisherman who's only catching tuna. I don't understand the other fish. I don't care. The tuna, I like the tuna. I love the taste of the tuna, and I can make enough money by just catching tuna. And I leave the other fish in the ocean for, guys like you.
Yeah, well, we try to get like the most special fishes then, I guess. But I mean, ultimately, Trump also has his World Liberty Finance thingy where you invest into a basket of altcoins. Do you make anything out of that, or is there anything interesting for yourself?
My most scarce commodity is time. There are only 24 hours in a day. We have to follow our own ecosystem, which is over 1,000 listed commodity companies, all promising to make the next big discovery. I need to follow macro. I don't have the time to study it. So that's why I invest in a specialized fund who is invested in the best projects together with the Silicon Valley top guys. So I never understand these investors who pick the best stocks in tech, in pharma, in commodities, in finance. You can't do that. You need to be a specialist. I'm a specialist in my own field. I think you try to be a specialist in your field. And I'm not afraid that I lose opportunities. You only need a few opportunities to do well. And sometimes it's even more important not to act, not to invest, I learned that I've been very active with startups. I'm one of the founding shareholders of Startup Bootcamp Amsterdam. And I'm in a basket of startup companies through my investments. I don't follow them one-to-one. I just look at the basket. And we had one unicorn. We had 50% that failed. Some are doing quite well. But that's the approach which I like, and that's what we do with our fund. You spread your risk over, let's say, 50 companies, and then you can accept quite a high degree of risk per investment. But I don't want to understand everything about altcoin. I leave that to other guys.
Final question. If you have a diversified portfolio, and we discussed in this conversation that the volatility is quite high. Volatility is likely going to go up even more in the coming few years, usually in end stages of a cycle, which any crypto-related investor knows about. It's going to go up even more. How do you handle your portfolio in these times? Even if, for instance, gold is going to go to $5,000 to $6,000 and there's a likelihood of a correction, or Bitcoin goes to $1 million, there is a likelihood of a turnaround.
Well, we hedge ourselves more and more. We started as a fund which was just a few million in 2008. Now we have around 130 million euros under management. We use more hedging techniques. We made our portfolio a bit more defensive, and we're in almost a constant process to get rid of volatility within our portfolio. We had such a high volatility within our portfolio a few years back. And we do that by making side pockets. Let's say uranium has a different cycle than gold. Bitcoin has another cycle than gold. We don't hesitate to go towards 10-50% cash when needed. But still, as I explained before, when the whole market starts to tumble, a fund like ours might go down as well. But then you have your private portfolio where an investment in listed stocks, commodity stocks or whatever, is only maximum 25% of your portfolio. So stocks might go down, but real estate in Dubai might go up, and physical gold might go up. So when you have these four pockets of 25% over the last 15, 20 years, one or two were, and mostly two or three were always going up every year. There were other parts of my portfolio that had good times over the years, but you need to diversify. And when you're well diversified, you can sleep well.
That's true.
And as a fund manager, when the whole market goes down, I don't have sleepless nights because I go down as well. Because you're a boat on the ocean, and when the waves go up, you rise, and when the waves go down, you decline. You should be a responsible fund manager, but people normally are aware that we are a high-risk, high-reward fund. And we've had 4 years of gross returns over 70%, and the same like crypto, then you should also accept years in which you go down 30, 40%. You can't have one without the other.
That's what I keep on telling my audience. In crypto, it's way heavier. Altcoins go down 80% and then they go up 10x.
Yeah.
I can tell that being fully allocated into crypto isn't the best strategy if you want to sleep well.
That's why I say max 25% in crypto. And that's
I think that's a good tip, as I'm going to go that way in the coming years. But still, I'm relatively
you
young.
learn over time.
yeah, and I'm still young, so I can take the risks.
Yeah.
You mentioned that I think you're working on a new book.
Well, I'm rewriting the Big Reset as I've done in 2016. So the first edition was printed in early 2014. Then I wrote a revised edition 2016 because China and Russia were teaming up, and I saw that as the start of something big, something large, and we've seen that happening in the last few years. And now I'm in the process of rewriting the whole book, and I still don't know whether the end result will be a new book or a revised edition of the Big Reset. But there's so much happening now every week. And I think we'll need until the middle of next year to understand where we're heading to.
Fair enough.
Yeah.
If
people want to follow that process, and now I'm starting to do my commercial plugging. I have a paid Patreon account. On my paid Patreon account, it's only 15 euros a month, but there I almost every day I publish there a short piece for people willing to understand the reset process. So what's happening, and how should we understand all these different actions? And that's for, the reset nerds who really want to stay on top of the story, because I was fed up by putting everything out for free on Twitter. I have a large Twitter following, as you know, and
you're very active on Twitter.
Yeah,
very active.
But the high core stuff and the very special, valuable research, I try to keep for my Patreon account. So that's my plug.
We'll make sure that the link is posted in the description beneath. Thank you very much. It's been a while, but I'm happy that you're here, and I think it's going to be a great period. So I wish you good luck with the investments, with the funds.
Yeah.
And for people that want to learn and understand what's happening, I think you've been a big inspiration for me over the past few years. Actually, over the past 20 years, as I've been watching you as a young kid at ATLZ.
You must have been young when I started.
I was like 8, 9 years old. I was watching it and writing down all the numbers of the AAX, so it was fun.
Oh, yeah. Well, we're also open for international investors. Sometimes people think our fund is only open for Dutch investors. No, we're open even for US investors. So visit our website when you want to find more information on that.
Also making sure that that's in the description beneath. Once again, thank you very much for being here and sharing your knowledge, and good luck on the journey.
Thank you.